The blue line is falling very, very quickly. And we see this big spike in the red, right? So it's the exact opposite to this one, right? Exact opposite. That means that that's a benchmark buy trade, isn't it? It's got all the same characteristics of a perfect benchmark trade, yes or no? Yeah? Is there anybody thinks that the benchmark's any different? It's 100% the same, isn't it? Except the opposite direction. So this is what a benchmark buy looks like. So what are you going to do? Well, guess what? Assuming you like benchmark trades, you're going to look for a transition in those areas to buy it. What happened to that trade? The buy trade, it was retested. Okay, so you have to do a bit of work. It was retested, but that buy trade just went for $1,000. Benchmark buy, $1,000 profit, plus a bit of change. Always good to get a little bit of change out the trade as well. And you can see that we started to see this huge volume coming in, big spike in volume. And we all know what we should do when we get big volume and a big candle like that. Also a $1,000 move, we should be banking it. We should absolutely pop that cash into our bank account and say, thanks very much, mate. And there's your $1,000 right there, guys. There's your $1,000. How often do we need to see this? Once a day. How many times do we see it? 10, 15 times a day. Sometimes 20 times a day. Greater or lesser extent in some of these trades. And you start to recognize how simple and easy and clean the benchmark process really is. So when you start recognizing, you can't not recognize it. It's almost like you can't unsee the perfect trade. That's the problem. A lot of people think they're seeing the perfect trade, but they're not. So therefore, they're benchmarking something that's not perfect, and therefore they wonder why they're still not successful. You've got to try and recognize what it is that makes this the perfect benchmark. What am I seeing? What am I doing? Where is the opportunity for me to step into that bit of business? And can I get involved? Can I take a deal here? Do they try and take the price down before they take the price up? How do they transition from those areas? And if we look at oil chart, if we look at the oil chart during that period, what happened on oil? What happened in oil before that trade even took place? If we go way back, bearing in mind this is a 1 minute chart and this is a 5 minute chart, what were they doing in here? They were lowballing the price into the previous lows, weren't they? You can see the pink line, blue line relationship. They're trying to lowball the price down into the lows inside of that story, weren't they? So we can obviously start to recognize that the idea of benchmarking starts to be, well, it starts to be kind of common. It starts to think, you start thinking about the process and you start asking the question, well, I can see it every time it's setting up, every single time. Well, if you can see it every single time, guys, it becomes very easy. All you have to do is execute. And obviously the takeaway from that trade, absolutely glorious. $1,000, easy opportunity to make money. And that's what we've got to try and understand, guys, is what is it that makes a benchmark for you as a trader? Not for me. What I see and what you see might be two different things. Hopefully they're not, because obviously they're a bit pointless. But obviously when we start talking about things like one line down and one line up, well, there's no debate about it. It's simply they're going in opposite directions. It's not degrees of opposite directions. It's the opposite direction. And if I can see that opposite direction coming out to play, well, obviously, nobody can argue about it because it is in the opposite direction. Benchmarking, incredibly important to know what a great trade looks like.